Hey, it's Clay, and this will be a video chart on ticker symbol IGC. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to this time frame. I think it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. Did this analysis yesterday, so that's where the red and green line annotations are coming from. After today's price movement, though, definitely some updates here need to be made. First thing I'm going to do is a little house cleaning, just get rid of that line up there. Yeah, it pertains to the chart. It's just not relevant anymore, and I don't want to risk causing clutter and confusion because there's lines everywhere you look. So let's try to keep this as clean as possible. First update, though, that does need to be made comes about based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So for those of you that did watch yesterday's video, I talked about right around here at 535 as a level of support, but as the price was broken earlier on in the day, you can see there was a mid-afternoon bounce to the upside, and surprise, surprise, the power of charts. Where did it get rejected? Right up there at that red line. I'm not saying the price can never, ever get up above that red line again. I'm just saying it makes sense why the price ultimately did get rejected during that, mid-afternoon bounce that it had right there. Now, actually, before you even worry about doing battle with the 535 mark, the near-term level that you're going to want to see the price get back above sooner than later is that pink line right there. That's the 200 period simple moving average. Even if you have a very basic understanding of charts, I'm sure you've heard of the 200 period, and you know that when the price is up above it, you definitely want to see the price stay up above it. And, right now it's still within the range of it, but, there's no doubt about it, the price is actually a little bit below it. So the very last thing you want to see happen, tomorrow or in the future is for the price to continue to separate away from it. The easiest way to look at that is the further the price separates to the downside of that pink line, that just represents the more and more strength, the more and more momentum the bears are getting. Again, I'm not saying that is what's going to happen. I'm just saying that's what that represents in the event that were to start to unfold going forward. So definitely keep an eye on that. You don't want to see the price get separated too far to the downside. As far as next potential areas of support, next overall one level that stands out to me is right down here around the $4.35 mark. So, if the price does start to separate more and more, then at that point, it would not be shocking at all to see the price, potentially drift down and test 435. Not necessarily tomorrow, but definitely, in the coming days. So very important the price stays above that pink line, or else, the bears are definitely going to pick up some more momentum. But we'll see what happens with it as the week continues to unfold. Still 3 days left. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.